Good afternoon, everyone. We'll wait for everyone to trickle in and we'll get started here in a couple minutes. Good afternoon, everyone. We'll be starting here in a couple minutes. We'll let some stragglers join and we'll get started. We'll just give everyone just one more minute. I know we still got we're still having a handful of people coming in, so we'll give everyone just a moment to get settled and then we'll get started. All right, let's go ahead and get started. Thank you all for joining us for our next webinar. So my name is Marty Williams with Physician Tax Solutions. What we have prepared for you today is a discussion on how to make the most of your tax-free fringe benefits from your employer or your C corporation. So I appreciate the time and taking the time out of your busy schedule to join us. A little bit about who we are. So again, my name is Marty Williams. We also have Malavika online. She is our tax manager. We have David, who has many letters after his name. The best way to describe him is the wizard. So we, and along with a handful of other individuals, make up the Physician Tax Solutions team. A little bit about Physician Tax Solutions and what we do. We focus on 5 key areas with our clients, everything from save, protect, build, retire, and impact. There's a lot that goes into each of these 5 components, and it would take quite a bit of time to unpack each one. Today, we're going to focus on tax minimization, but more specifically, tax-free fringe benefits from a C corporation. So if you would like to learn more about these other components, reaching back out to us after this presentation is a great way for us to explain a little bit more about what we do and how we might be able to help. So today we have an agenda. First, we're going to talk about who qualifies for these fringe benefits, and then we'll move into the types of benefits that are allowed. The third component, or the third item, is record keeping and reporting requirements. What does it take to keep these things up to date? And then we will complete our session today with a Q&A. So if you do have any questions throughout this presentation, you can go ahead and throw them in the chat box. And if we have time, we can answer them during the presentation in the chat box, or whenever we get to the Q&A, we'll read off all of the questions that we have and answer as many as we have time for. One thing to keep in mind is about an hour after this presentation ends, you will be receiving a follow-up email from us that will have this recording of this presentation, as well as PDF versions of the slide deck that we'll be presenting on. So with that being said, before we get into the meat and potatoes, I am very interested to poll this audience to see who all we have in the audience today. So I'm going to ask a polling question, and the polling question says, do you own a C corporation? The options are yes, and I maximize my fringe benefits. Yes, but I don't maximize my fringe benefits. No, but maybe I should. Or what the heck is a C corporation? So take a couple minutes, take our poll, and we'll see where everyone lines out. Give everyone another couple seconds to chime in, and then we'll be closing the poll. All right. So here's where we're at today. We've got 33% of our audience says, yes, they do have a C corporation, but they don't believe they're maximizing their benefits. And 2/3 of our audience is saying, no, they do not have a C corporation, but maybe you should. So both of these instances are what we're going to be talking about today is going to be some great information to either maximize that C Corp, or maybe you might be interested in starting a C corporation. So with that being said, thank you for your guys' time. I'm going to pass it over to David and Mal, and we'll start with who qualifies for a C corporation.
So Marty, thank you very much. So what I think would be very important is for everybody listening today, I think everyone here will get something out of this, either that they can take back if you're just a W-2 employee of a larger practice or a hospital or a clinic, that you can go back next time you negotiate your employment contract and add some of these fringe benefits that that you think you are currently paying for, but you're just not getting it in the form of a tax-free benefit. And then those of you who have self-employment income, 1099 income, or have your own practice, I would a large number of you may be unincorporated or just as sole proprietors. I would submit that as a self-employed individual, you're in the category of what we call the greater or the 2% or greater S corporation shareholder, meaning that a lot of these fringe benefits would not apply to you if you are self-employed and or own your own S corporation. However, if any of you happen to be in a very large S corporation where you're a shareholder and an employee of that S corporation, and you happen to own less than 2%, then you are in the same category as a non-owner employee, and that these fringe benefits would apply to you. If you're in that 2% or more S corporation, and or you're a sole proprietor, first of all, if you're a sole proprietor, probably the first thing you need to do is form an S corporation to run your self-employment income through. That, if that's a medical practice, then that would have to comply with your state law professional entity formation rules, which we can certainly help with that if you need help. If you already are an S corporation, but you own more than 2%, then you're gonna be especially interested in having a C corporation that you can then also enjoy these tax-free fringe benefits. So S corporations, like I said, aren't going to be eligible, or if you're more than 2% of a shareholder. So you're going to need to have, if you do have an S corporation, you're going to want to have a C corporation to go along with it. And we'll show you exactly how you would set that up and how that would benefit you. So in our world of tax planning, over a certain amount of self-employment income, it usually makes sense for our clients to have both an S corporation and a C corporation to get the best of both worlds. There are certain things that you can deduct as an S corporation shareholder. We've talked about those on our past webinars, and we'll be continuing to talk about those on future webinars. But you're probably also going to want to have a C corporation to get all the benefits that are out there. So let's Marty. I'm sorry I didn't let Mal answer that question, but I answered it myself. But anyway, let's move on to the next slide. And let me just give you an overview here. This is the best of both worlds. Again, like I mentioned before, having both an S corporation, which could be your medical practice or your self-employment income. One of the, if you don't have another business that you can create a C corporation, one way that you could create one is to provide administrative services or management services back to your S corporation. So that would be simply, for example, a limited liability company that makes an election to be taxed as a C corporation with the Internal Revenue Service. And then that would start the ball rolling for you to start taking advantage of these tax-free fringe benefits. I listed a couple of them here. We'll go into each one a deeper dive, and then there's a list of several miscellaneous ones that we won't cover other than to show you the list of what they are. The other potentially big reason to have a C corporation, besides just being able to extract all of these tax-free fringe benefits that you otherwise are paying for right now, but with after-tax dollars, is to use it as a strategy to shift income to the extent that your federal marginal tax bracket is above 21%. Before 2018, the C corporation's tax bracket started at 15%, so it was even a better opportunity back then. But even since 2018, the C corporation tax rate is a flat 21%. So for a married filing joint taxpayer, generally, up around $110,000, $112,000 of taxable income, you are bumped into the 22% tax bracket. So for most, physicians that are out practicing, you're going to be well above the 21% tax bracket. So a C corporation can also act as an income shifting vehicle where you can shift income from your S corporation, which would have been taxed at your highest marginal tax bracket, down to that 21% bracket. So our recommendation with a lot of our clients is that you need to have both in order to get the best of both worlds. So let's go to Mal, did you have anything to add?
Yeah, so David, so when you say shifting income from S Corp to C Corp, can we do more than one time, or how does that work? If you want to go in detail about that.
So you could do it a couple ways. If you have a monthly payment that is going from your S Corp to your C Corp, you would just increase that amount by whatever that extra amount of income that is above and beyond what you need in there to reimburse yourself or to pay for those benefits. So for example, if all your benefits were cost $10,000 a month, or actually maybe a little high, $5,000 a month, you could pay an extra $5,000 above and beyond that, so a total of $10,000 a month. and that extra $10,000 or that extra $5,000 would be taxed then at that lower 21% bracket.
Okay.
But good question. So, I listed there a couple of the S corporation benefits. We're not going to focus on those on this presentation, but the home office, the 14-day rental rule, putting your kids on payroll, then making the most of your meals and travel, and then having an accountable reimbursement plan with your S corporation. All of those we've talked a little bit about in our last webinar, but we certainly are going to be repeating those and doing a much deeper dive in the upcoming webinars.
Okay.
So on this next slide, now that we know there's a wide universe of people that could benefit from these fringe benefits, no matter whether you're a W-2 employee or self-employed or you already have an S corporation. Mal, what are we talking about when we say the phrase fringe benefit?
In layman words, if I have to explain what fringe benefits are, is basically a recipient receiving a payment for a particular service that he did. So for example, let's say you provide an employee with a fringe benefit when you allow the employee to use a business vehicle or commute to and fro from work. So if in the definition, if you have to tell who a recipient is, he can be an employee, you're paying an independent contractor, a partner, or yourself in a C corporation or a director in a C corporation.
Great. So it really applies to a lot of different recipients. It's not just we're not just talking about W-2 employees that you can provide fringe benefits to.
Right. So in all these fringe benefits that we're talking about are taxable to the recipients unless they're specifically excludable from the IRC code.
And so it's that list of ones that are going to be excluded that we're going to focus on today.
Yes.
There's a long list of potential other fringe benefits, such as if your C corporation paid for your country club dues or gym membership. That could be construed as a fringe benefit because it's being given to you in exchange for services, but that is not excludable from income. That would be treated as if it was taxable wages. Mm-hmm. So good. So now that we have kind of an understanding of a fringe benefit, so it's pretty much any form of a benefit provided to a list of these people. Tell us a little bit about how cafeteria plans work.
Okay. Before that, I'd like to basically lay out what a cafeteria plan is when an employee benefits, it's an employee benefit plan that allows, let's say, staff to choose from a variety of pre-tax benefits. And employees can actually contribute a portion of their gross income before any taxes are deducted. So laying out, those are the cafeteria, it's just a basic definition of what a cafeteria plan is. But under those cafeteria plans, there are other benefits that we're going to talk about are accident and health benefits, adoption assistance, dependent care assistance, term lifetime insurance coverage, any healthcare savings accounts that you have in all of your 401k contributions that we're going to talk about in the next slides.
So the way they work in essence, so it's kind of like going through a smorgasbord or a cafeteria. This is not a meal plan. Type of benefit. This is where you just get to choose. You get to pick and choose. Every employee that's eligible gets to pick and choose how much they want this allotment of money that the employer is setting aside for them to spend on any one of these listed items. And if they want it to all go into their 401k, they can do that. If they want a little bit of it to go into health savings and a little bit, for dependent care, they can do that, and they can change that, over the course of their employment. Depending on what their needs are.
Yeah, so the employee can definitely choose between these varieties that we're talking about.
Yeah, perfect. Yeah, so cafeteria plans are pretty common. When you have several employees, usually they're not as common when you just you're the only employee of your C corporation because you really don't need a cafeteria plan. You're just going to buy the fringe benefits that you need. But when you want extra flexibility. And ability for other employees to pick and choose what they want. That's where we typically see cafeteria plans more commonly used. Well, great. Okay, so that's just a footnote on how some fringe benefits are offered in larger groups. We've talked a little bit about some of these, but Mal, give us a little heads up on what are the types of fringe benefits that we can exclude from income.
So there are different categories here. We talked a little bit, but in detail, we have healthcare, anything that you pay out of pocket, those can be included. Education, continued education if you want to do on that. Childcare, anything that you pay for your child expenses, either after school, daycare, any activities they do, those can be included too. I like this one the most, the athletic facility. We will get into detail, but in short, any gym equipment that you bought, those can be deducted too. And then, anyways, we'll talk in detail on the slide that we did. And then we're going to talk a little bit about the last time we talked about Section 139. Those we're going to go on detail how COVID, if you can take any of these under the COVID-19 situations, and there are some other miscellaneous fringe benefits that you can talk about. We're going to talk about.
And probably the best news is when we say it's these are excluded from income, it's not just income tax, but it's also FICA and Medicare tax and unemployment taxes as well. So, when you start adding all those taxes together, so you've got let's say you're in a 37% marginal federal bracket, federal income, and you've got maybe a state income tax of 6%, and then you've got FICA and Medicare tax that are 15.3% up to a certain amount, and unemployment taxes that are sometimes are 2 or 3%. We could be talking about people saving taxes in the 50 to 60% range, depending on where you live. Yeah, and just as another note, starting in 2018, if you remember seeing this on your personal tax return, up until 2018, you could deduct your moving expenses that you paid. When they did away with that deduction for individuals, they also did away with that for employers. To provide moving expense reimbursements as a tax-free fringe benefit. So starting in 2018, that one got taken off the list, but all the rest of them, at least for now, are still there. So let's move on to the next slide, and let's just do a deeper dive. So Mal, what are we talking about when we say healthcare-related fringe benefits?
So the accident or health plan it basically provides benefits for your employees, their spouses, their dependents, or their children when there's an event that happens of personal injury or sickness. So what happens is under this accident and health benefits, it contributes to your health savings accounts that we were talking about, any medical reimbursements that you paid out of pocket, and payments that you made out of pocket when you have a personal injury or sickness. Great. And then this also includes long-term care insurance too. So
tell us why getting a medical expense reimbursement from a C corporation is better than itemizing your medical expenses.
So when you try to itemize your medical expenses under Schedule A, it has to meet the requirement of 10% of at least your adjusted gross income. Under C-Corp, you can actually take the deduction directly if you have an employee under that.
So basically, you're getting a dollar for dollar deduction if you run it through your C Corp. If you don't have a C Corp and your employer doesn't have a fringe benefit to reimburse you for medical expenses, then your really only other option is to itemize. And then before you even get a dollar of benefit on Schedule A, you got to exceed 10% of your adjusted gross income. So it would have to be a pretty catastrophic illness or sickness, before you'd ever, assuming that your income was relatively high. So this is about the only way to really, get the best bang for the buck from medical expenses, right?
True. So in order to actually take it under a Schedule C, your medical has to be so high to actually reach your 10% AGI. And given that our platform we're talking to a lot of doctors, 10% AGI, meeting that cap is going to, you basically have to look at a very big medical bill in order to qualify for a Schedule A deduction.
Yeah. Well, and another little known component of this accident and health benefits is paying employees who have gotten sick. So any employees, including yourself, who might have gotten sick with the coronavirus and recovered, but just not able to work. Payments that you make to yourself in lieu of salary are basically tax-free fringe benefits as well. So not that you'd want to get sick, but that is another tax-free fringe benefit that may have become very valuable during the last several months. And then on group term health insurance or life insurance, this is not always a big item for people, but it is worth mentioning that $50,000 of death benefit is completely tax-free. It actually, what the IRS publishes a table that any death benefit over $50,000 that you pay for yourself, part of that premium or part of the amount that is for that extra coverage above $50,000 is included back on your W-2. But it does come out generally in the employee's favor to go ahead and have your life insurance provided as a fringe benefit, and going ahead, and if it's over $50,000, having that income item added to your W-2. You also can buy a small policy for spouses and dependents, and the same W-2 impact if that amount is higher than that. So those are the healthcare related fringe benefits, the big ones that we wanted to talk about, and there's a couple of smaller benefits that are healthcare related, as well as some of the other ones that we'll talk about that we put in the miscellaneous list at the end, just because they probably aren't significant. They don't get a lot of attention unless you work for a really big corporation that has that takes advantage of this. But what we're trying to focus on here are just the ones that we think are probably the most valuable for you as a physician. So let's move from the healthcare related to the education related fringe benefits. So Mal, can you tell us a little bit about what those are and how much we can take advantage of?
Right. So when it comes to education assistant fringe benefits, it basically means that any amounts that you pay or incur for your employees' education expenses can be taken here. So these expenses generally include the cost of books, equipment fees, supplies, and tuition. So these are all some of the benefits that you see under the education assistance. However, these expenses do not include the cost of a course or other educations in anything that involves sports, gaming, or your hobbies. They don't include in that. Unless this expense has a reasonable relationship to your business, those cannot be deducted.
Great.
And also, it is required as a part of it has to be a requirement as a part of your degree program.
And so that's up to $5,250 per employee, and that's per year, right?
Correct.
Yeah. So that could come in handy, especially if you're working on if you're still working on a degree. Especially if you're a resident or an intern, and you're still and you've got self-employment income, there may be an opportunity to write off some of your medical school expenses as you're continuing to finish your degree. And then the new one that came up, and a lot of people probably saw this in the press, but employers can also pay off part of your student loans for you, and that's tax-free, isn't it, Mal?
That is.
Yeah, and unfortunately, it's only in place for this year. But still, if you have a C corporation and you've got a student loan payment that's due just up to $5,250, you just want to make your student loan payments out of your C corporation. They'll be completely tax deductible at your C corp level, which you're probably not going to be able to deduct your student loan interest if your income's too high. And it's not income to you. So certainly take advantage of that. Or if you have an employer that you can have them pay down your student loan in lieu of paying you a salary, then that would also be highly beneficial. So those are the main education related fringe benefits. And then moving on, we have the next benefit, I think, is it the athletic facility?
Childcare is next.
Oh, childcare. Sorry. So Mal, what do we include when we talk about childcare fringe benefits?
Mal, are you there?
Mal,
Your
audio cut out. While she's coming online, let me just fill in on what these are. So the first one is an adoption assistance program. So if you or any of your employees are incurring any adoption expenses, those expenses can be reimbursed dollar for dollar out of the C Corporation, which are tax deductible to the C Corporation and not income to the employee. So that is generally for, other than if you're highly compensated, obviously, and or more than a 5% shareholder. If you're more than a 5% shareholder and or highly compensated, you still are eligible for the adoption credit, which is a federal tax credit on the individual level. So this is just it's a mirror program of what you get individually, but it is also included as a fringe benefit that a C corporation or an employer can provide. And then dependent care assistance. So this is going to be where you have a dual income spouse or partner. You're filing a joint return and you're incurring daycare or after school education. That also includes some summer camps for the kids. Some other things that the kids may spend, money for, or you may spend money for the kids. But that is that's a reimbursement that is the lesser of the $5,000 per year of those benefits or those expenses that are incurred, and or the employee or spouse's earned income. So in this situation, if your spouse isn't employed and you have daycare related expenses, this is another opportunity for you to put your spouse on payroll, either from your S corporation or your C corporation, just so that you can take advantage of this fringe benefit. Mal, did we get you back?
Can you hear me now?
Yes, we can hear you. Awesome. I was getting nervous. You were the expert on this. But anyway, did you have? I think that covers the child care fringe benefits. And then Mal, you were saying your favorite one is the athletic facility.
Right.
Is that the next one, Marty?
Yeah. That's the one.
Yes. So tell us how this is beneficial.
So basically, it includes the cost. Any athletic facility, what we're talking here is it includes the cost of a gym or an athletic facility located on the premises of an employer, but it has to be used by the employees or their family members, right? So what happens is when you got, so these especially, let me tell you what these facilities include are swimming pools or tennis courts or fitness equipment. So the employee can basically depreciate the equipment and the land improvement and everything that you used to build these gyms, you can actually depreciate. And then any expenses that you incur in improving these gym equipments or maintaining the pool, all these, any cleaning expenses, all these are included when you're trying to talk about this athletic facility fringe benefit.
Yeah, so this is usually one of those fringe benefits that always gets a wow or kind of a I didn't know that type of expression. So it's always great to be able to share this with our clients, saying if you have any gym equipment at home, especially since your S corporation and or your C corporation are domiciled at your home, so that you have a home office. Therefore, the gym as well as the swimming pool are on the employer's premises. So when you start thinking about how expensive a pool is and or a tennis court if you have one, but certainly fitness equipment, and the fact that you can depreciate those on your tax return, it almost comes away as almost feeling like a too good to be true gift. And then when you can deduct your maintenance expenses for maintaining your pool, it just makes that expense a lot more tolerable. And we'll have an example here in a little bit where we show you how all of these benefits can add up and really save you a fairly significant amount of money in tax. Especially
with a lot of people trying to stay home in the last 2 or 3 months. If you have built your gym up, you've added equipment, this is one of the best fringe benefits that you can take advantage of. So that's one of the tax plans that we can add to.
Well, and I've been guilty of that. I think I've gotten a little carried away with my home gym. So
David is definitely taking good use of this fringe benefit this year.
I'd say that's an understatement.
So, well, good. Well, let's move on. If you joined us for our last presentation where we talked about some of the fringe benefits that you can get as an S corporation, this benefit is also available as a tax-free fringe benefit for a C corporation. So, Mal, can you give us a little description of what's under this code section 139?
Talked about it last time. In payments from an employer C-Corp.
Mal, we're losing your audio again. You're coming in and out a little bit.
So let me step in while she's reconnecting. So basically, this is for people who, are incurring any expenses related to COVID-19, any personal family expenses. It's also for expenses, if you have been while you were staying at home and working, whether it was telemedicine or just reviewing paperwork. It allows you to get reimbursed out of your C corporation to either rehabilitate or build out your home office, and also any kind of repairs or maintenance of that. But all of that money, basically, for you that you spend, whether it was additional money you spent or you just spent it as part of your normal home maintenance expenses. Now, part of that can be converted into a tax-free fringe benefit as well. And this provision's been around for several decades. It actually the last time we saw it was in the 9/11 area in New York City. But now that we have a national disaster, now everyone around the country can benefit from this this benefit. Mal, did you get back? Did you come back on? Oh, we can't hear you still. So you might have to disconnect and then join us again. So let's move on to the next one, Marty.
Yeah. So David, what are some of the other fringe benefits that are allowed?
So these are what I called somewhat de minimis or small items, but they could certainly add up. So if you, a lot of people don't know this because you just take it for granted, but if you have an eating facility at the hospital that you work and they give you meals, or credit for meals that you don't have to pay for, you would think that that's just normal, but actually that is a carved out fringe benefit that the hospital or clinic is allowed to have eating provide meals, incidental meals, and be able to provide that to you on a tax-free basis. Achievement awards, that's for people that have worked for long periods of time and get awards. They can get that tax-free. I talked about the athletic facilities. The other big one is your C-Corp and your S-Corp obviously can deduct your cell phone. But if you work for a larger hospital, that could be a tax-free fringe benefit. And then the rest of them are just small incidental expenses. So I haven't yet seen a physician client that has taken advantage of very many of these that aren't otherwise deducting these expenses as business expenses. So Mal, are you back?
Can you hear me now?
Yes, we can hear you. Okay. So
Marty, when you go back, David, can you go in detail about the tuition reduction?
The tuition reduction. Yeah. So that is generally that's limited to an educational facility that reduces the tuition for a student or an employee of the university. So they reduce the tuition if an employee's children go to that university, for example. That's considered a tax-free fringe benefit.
Okay.
But it usually doesn't apply to a medical practice, but more of an educational institution. So we have an example here just to show you how these things can add up. So Mal, do you want to take us through this example?
Yeah, you guys can hear me, right? Normal?
Yes.
We're good.
Okay. So our example is based on everything that we covered here. We're just going to show in numbers how this particular person is going to be benefiting from having a C corporation. So Paul here is a self-employed anesthesiologist, and he's currently in a 37% federal and 3% state marginal income tax bracket. Here, one of his best advantage is he has both an S corporation for his medical business and a C corporation for his admin services. So Paul's C corporation, he employs his wife Sarah under his C corporation. So what he does is move certain income from his S corporation to his C corporation, like David talked about it right in the beginning, and then he employs his wife under that C corporation. So now that he employed Sarah under that, this C corporation provides the following employee benefits to Sarah. Any medical reimbursement, we put medical reimbursement of $10,600, which means she might have paid any out-of-pocket expenses for her medical bills. Student loan payment for $5,250, dependent care assistance for $5,000, any dependent care after school or any sports activities her kids did, and athletic facility is where her home gym depreciation cost was, let's say she bought equipment worth of $7,500 and we're taking full cost depreciation for that for $7,500. She got a swimming pool depreciation, original cost $75,000 plus she has annual maintenance like chemicals and cleaning expenses, and we're taking 27.5 years depreciation on that. So that goes around $8,227. And then she has COVID-19 expense reimbursements for $9,000. So all her tax-free benefits, tax-free fringe benefits total up to $45,575. And given that Paul was in a 37 federal bracket, his tax savings on 40%, when he's on 40% is $18,231.
So that's, and that, most of those expenses are every year. So everything other than expensing the home gym equipment and potentially when the national disaster of COVID-19 are over, all of those other fringe benefits could be a year after year fringe benefit.
Correct.
And if we did what I would talked about earlier and use this, the C corporation also as an income shifting strategy, if we shifted an extra $50,000 a year over to the C corporation, which would be tax deductible to the S corporation and taxable income to the C corporation, because Paul's in a 37% federal bracket and the C corporation's only in a 21% tax bracket, that would result in an additional $8,000 of tax savings every year.
That is only if he does the extra $50K because he gets a deduction on his S corporation.
That's correct. Yeah, so it can really add up as these numbers show.
Right.
So great. Well, let's bring it home then, and then now that we've talked about the example, and we've talked about what are all the benefits. Now let's talk about how you have to keep records for this. So you can't just start reimbursing yourself for these expenses. You're going to, every one of these fringe benefits is required to have a written plan in place. You have to have proper documentation to show, to track all of these expenses. So you're going to have to track your dependent care expenses that you're going to need to be reimbursed. Same with the medical expenses, those kind of things. And then some of these fringe benefits, for example, the group term life insurance benefit, if you pay for 401k, a cafeteria plan where you're contributing for a 401k, and or an HSA plan, all of those have payroll tax reporting requirements as well. So just FYI, make sure if you do set up the C corporation, that you're working with a firm like Physician Tax Solutions, where we can help you document all of these benefits.
Now, we were talking about this last time when we were doing our home office presentation too. Just make sure your documentation is pretty right, just so we can have a track of all your expenses by the end of the year, so you don't have to go through a lot of statements to give it to us when we're doing your tax return.
Great.
All right, so let me jump back in. So I asked an earlier polling question of testing the audience or polling the audience to see who has a C corporation or who might be interested in starting one after this presentation. I've got one more, and after seeing this presentation on C corporations, how are you feeling about what level of tax planning you're doing today? So I just opened a poll asking you to describe the level of tax planning you're at. Do you feel your tax is possible, or are you somewhere around the middle where you do some tax planning, but you're positive you're leaving money on the table, or my least favorite version, which is I really like the IRS. So take a couple seconds. Let's hear what the audience has to say. What level of tax planning do you think you're at today?
Looks like we have some comedians.
I think so. Give everyone another couple seconds before I close the poll. And I'm going to close it. So it looks like how I'm going to read this is everyone believes that they're leaving a lot of money on the table and does not feel like they have a good tax plan in place. So what I would like to transition this conversation to before we get into our Q&A is a little bit about how we work with physicians and healthcare providers to make sure that they are paying as little in tax as possible. We have something called our strategic physician system process. At the beginning of the presentation, I talked about the model and the 5 areas that we focus on engagement on. This is getting into our 4-step process that we take all of our clients on, starting with something called a strategic blueprint, where it creates a needs assessment along with a set of recommendations that are specifically designed for your situation. That is a service we charge. We charge just under $1,000 for it, but we also have a guarantee saying that if we can't save you $10,000 in taxes or find you $10,000 of tax savings in that strategic blueprint in the first year, then we will refund that fee. From there, we have an onboarding period, introduce you to the rest of our team, get you into our systems. Then step 3 is implementation, where we begin implementing these recommendations like the C-Corp Fringe benefits that we've discussed today, as well as the home office deduction that we spoke about in the last webinar. And then the 4th, as well as many more strategies. And then the 4th component is one of the more unique things that we do as a CPA firm, and it's a quarterly pulse, where every 90 days we like to get in front of our clients, ask what's the most important thing that needs to get done in the next 90 days. What issues are you having in your business, your personal life, your tax, accounting, and financial world, and how can we as a CPA and advisory firm help? We find that it's very easy to save taxes as long as we act proactively throughout the year, which is typically what we find most accountants don't do, is something like that quarterly pulse, checking in, making sure that the strategies are as effective as possible. Sometimes in those quarterly pulse, if we figure out revenues are up above what our last projection showed, maybe there's some tax strategies that we need to turn the faucet on for. So with that being said, I want to move to our schedule for our upcoming webinars. The next couple that we have coming up, top mid-year tax strategies for physicians in the current environment. So some things have changed throughout the year. Is your tax plan still the right tax plan? Or what should you be thinking about moving into the middle part of 2020? And then after that, making the most of your S corporation deductions. So today is C. Here in about a month, we'll be covering S corporations. And then 2 weeks after that, hiring your children. I'm sure many of you are familiar with that strategy or have heard of that strategy. We'll go into exactly how to do it and stay above board. So with that being said, I want to move to our Q&A. And if we don't get to your question today, feel free to schedule a call or send me an email. So my email is on the screen. I am also in the chat. I am posting a link to an app called Calendly that is linked directly to my calendar. So anybody can click that link and schedule a call with me. And for a 45-minute free consultation, I can learn a little bit more about your situation and see if there's anything that Physician Tax Solutions can do to help. So if you would like to learn more, click that link in the chat box, schedule a call with me. Otherwise, I'm going to open it up for questions and answers. So I know we've fielded a couple questions so far about the recordings of these webinars. So these webinars are being recorded. If you registered for this event, you will receive the recording of this webinar as well as the PDF version of the slide deck that we're presenting on roughly an hour after this call ends. So if you were a little bit late to the show and wanted to catch up on what you missed, you will be receiving it in just a few moments. So what other questions do we have about C Corporation fringe benefits, other tax planning strategies that we talked about in the past, or others that you're curious about, even anything about the PPP loans? If you applied for the PPP and have some questions, we can also probably facilitate a handful of those questions as well. So I'll leave it up to you. Let's hear what you guys have to ask. While we're waiting for everyone to be thinking, Mal, do you have any questions for David? Anything that we missed or that we didn't cover yet?
I don't think so.
So Mal, what is the advantage of doing tax planning early in the year rather than late in the year?
Multiple, I should say. If we start as soon as possible, we can, let's say if you don't have a C corporation, we can take immediate action and set up a C corporation with you. So you can get, instead of setting your C corporation in December, let's say we're setting your C corporation up right now in May or June, you can take a lot more benefits than in December than now. So that's just an example. So if anything, start your tax planning now. Let us know how your income is right now, how you're flowing. Is it W-2, 1099? We can help you with it.
Great.
David, my question for you is, of all the physicians and scenarios that you've seen in the past couple of years, what would you say is the biggest mistake that a physician's making whenever it comes to paying too much tax?
Well, I think I think a lot of people think that their accountant who is trained to put numbers on a return, that they somehow are inherently looking over the shoulder of their client and giving them ideas, to further reduce their taxes. And I think what ends up happening for most accounting firms is they're so busy, 9.5 months of the year until the October 15th filing deadline, that they don't really have time in their schedule to be proactive until the very end of the year when it's almost too late to do anything. And most of them are too busy themselves catching up on continuing education and other things. So I think one of the biggest mistakes is, it's kind of like if you have a medical condition, in a lot of cases, it's good to get a second opinion. I would submit that the same wisdom applies with a tax return. If you're in doubt or you have a concern that you might be leaving money on the table, just get a second opinion. I think what you'd find if you went to a proactive tax planning firm is you're gonna see if you are missing any opportunities, and if so, how much.
All right. Well, thank you, David. Thank you, David. Thank you, Mal, for taking the time. Thank you all for sticking it out to the end of this presentation. Again, if you do have any questions, we're always here to help in whatever we can. That's really gets to the heart of Physician Tax Solutions' purpose for being, or why we do what we do, is to help physicians achieve financial freedom. So doing these webinars, creating these education programs is really how we see that we're able to help fulfill on that promise. So the last slide that I have is a thank you to physicians, especially during this pandemic. Some of you might be on the front line, some of you might not, but thank you all for everything that you do. Thank you for attending this webinar, and I look forward to hearing from many of you in the coming weeks to learn a little bit more about your situation. Look forward to possibly even seeing you in 2 weeks for our next webinar talking about mid-year tax planning strategies for physicians. So thank you all, and have a good rest of your evening.
Thank you, Marty.
Thanks everyone. Bye-bye.